Good afternoon and welcome to the BANGO PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And now I'd like to hand you over to CEO Paul Arby. Good afternoon, sir.
Hello and thank you everybody, and welcome to our webcast for the first half 22 interim results. Really grateful for everybody joining here live with us today, and encourage you to ask Q&A, but also thanks for everybody who's watching after the event online. And if during watching it you think of a question that you didn't answer, you can always email us at investors@bango.com. So hopefully you've had time to look through some of the material on the investor website. A really great first half. Revenue growth of 9%, end user spend up 16%, really solid results, and that's in the context of obviously a very strong dollar against currencies, particularly the Japanese yen, and also where the spending patterns are slightly different in this half year versus last half year. Last half year Amazon Prime Day was in June, this year it's in July, so it's moved from first half to second half. So all in all, a really strong set of results. We're really pleased that growth on the top line allowed us to continue to invest in growing the business and capturing the opportunity that we see ahead of us, that resulted in a flat EBITDA versus the first half, because we chose to invest that additional profit from that top line growth back into the business to allow us to continue to grow and capture new market share. One of the new metrics that we report at this time, which is a new metric we continue to report, is what we call annual recurring revenue. So that's a good measure of the platform business. You remember the platform, the digital vending machine, as we've called it, where we create like a SaaS type license for operators to bundle tens of different services together. Has grown up by over 3.5 times. It was sub $1 million at the end of last year. It's $3.4 million at the end of June. And I think there are two really key messages about that. It shows a really strong growth in the platform business. New operators launching, which triggers the start of that license revenue. Existing operators starting to climb through the tiers, right through the capacity tiers of that. So again, both driving an ARR up. And it gives us a really stable and predictable revenue base moving forward. So just simple maths show you that we, in the second half, 1.7 million is already locked in, because we sort of have that as the end of the June recurring revenue stream. So really solid set of results, and we're really pleased with the progress that we've made in the first half. We sort of look at some of the more sort of operational highlights. Again, linking to the platform deals, we announced a deal with T-Mobile in the US. If you add that to the deal we already have with Verizon, you can now see that the majority of people in the US are basically using Bango to bundle their subscriptions on their mobile with their mobile partner. Over 250 million customers through a combination of T-Mobile and Verizon. And that's bringing even more merchants into the platform. We added more merchants than ever before in a period. We added 24 new merchants in the first half. And that's across all sorts of verticals, from sort of, the traditional video providers to people like Peloton and Duolingo and Calm. And when we talk about adding a merchant, we're not talking about making one connection. We're talking about bringing a merchant into the platform so they can connect to the tens of operators that are also connected to the platform. So a really big growth multiplier over time. And obviously, post-period, we announced a platform agreement with NTT Docomo, and that extends our relationship with NTT Docomo. We've already done the physical for carrier billing goods for a number of years with Amazon through NTT Docomo, and this adds all their app stores, as well as exciting new merchants like Jetstar, who sort of allows you to buy an airline ticket and charge it to your phone bill, and also more physical goods through Shopify. So adding Docomo as a payment method, carrier billing through Docomo as a payment method within the Shopify. So in a Shopify shop, you can choose to pay via carrier billing. So really exciting developments there from the payment side. And that follows through, I think, into audience. Some really new custom wins in new verticals, Adidas and Hard Rock, so some maybe unusual brands as part of that mix, as well as extension into our usual app games developers, where we added the Marvel games publisher Kabam as a customer in the first half, along with many more that we've just not named. Facebook continues to be an important part of that business, and we were awarded the official partner status from Facebook in the first half, meaning that when app developers go into the Facebook Ad Manager, they can now see Bango audiences as a recommended way of helping them target their marketing and generate better return on their ad spend. But likewise, we expanded into new platforms. I think we've talked about TikTok before on previous calls, and we added Snapchat in the first half of the year, and we'll probably add Twitter in the second half. So continuing growth within the existing platforms, but also across platforms as well. We step back and look at the bigger company. We got a record employee engagement score in the first half. The first half is always the period when we measure our employee engagement. We got a really incredible score last year of 82%, and we thought that was probably as high as it could go, but actually we increased even further this year to 83%. And that puts us in a position where we have a really motivated employee base who's focused on driving the vision, focused on driving growth for Bango. And it means that when we're recruiting to grow rather than backfill, and that's a luxury that very few tech companies can boast in the current environment. So really strong employee engagement score. And likewise, post-period, in the same time as announcing the platform agreement with NTT Docomo, we announced that we'd acquired their payments business. So previously traded as Docomo Digital, somebody we've competed with for a number of years. And we'll talk a lot more about that acquisition and how the integration of that business is going towards the back end of this presentation. But a significant deal for us as a company. You've heard me talk before about that journey from tens to hundreds of millions of dollars of revenue. This pushed us over 2 years further forward on that journey. So a really transformational acquisition. And likewise, we're getting more and more sort of visibility publicly, multiple award wins and nominations. You can see we've been nominated for multiple AIM awards, multiple tech awards. We won the Business Weekly Quoted Company of the Year against some pretty stiff competition. Bango Audiences won a prestigious SAMMY. So that's basically a sales and marketing equivalent of an Emmy for the best technology in 2022. And already this slide's out today because the e-commerce award in the bottom left, where it lists as a finalist, we actually won that yesterday. So really, really strong recognition of some of the innovation and unique technology we're bringing, and the way we're actually bringing that to market and operating as a business across all sorts of different industry bodies. Just as a reminder of the strategy, you've seen me talk about this a lot before, but our strategy is really centered around this virtuous circle. We're connecting merchants in the platform, connect them to paying users via somebody who has a bill on which we can place that charge. That generates this huge pool of payment data that allows us to generate insights from that payment data that we can help to make people better target their marketing using purchase behavior. So targeting marketing based on purchase behavior. That means you immediately find more paying users, which generates more payment data to allow us to generate more insights. Really, two businesses, growth in one very much drives growth in the other. And I think you see that all through the results that we reported in the first half. So with that, let me pause for a while and turn over to Matt to run through some of the financials.
Thanks, Paul. Good afternoon, all. Thanks for joining us. As you can see, we had a great organic growth during the first half of this year. We had end user spend increasing 16%, going up to 2.9 billion. You'll also see that the revenues increased by 9% to 10.8 million. Now, this is without taking into account any of the currency headwinds. Typically, if we were to adjust for those, both the end user spend and the revenues would be up around 8 to 10% on the announced growth that we had in place. One other thing to recognise as well when you're looking at the revenues for the first half as compared to the previous year is that in 2021, Amazon Prime Day fell in the first half of the year. So that was reflected in the 9.9 million from 2021, whereas within 2022, it fell into July this year. So it will be shown in our second half. Together as well, we found out the other day that Amazon also doing a second Prime Day in October, which should also help change that revenue profile back to more 40-60% that we've experienced in previous years. So growth continues to be strong on the revenues. It's a 5-year compound annual growth of 32.3%. And as Paul referenced, we've also now starting to announce our ARR number of 3.4 million, just reflecting the deals as they come through from our platform licensing subscription deals. So more about that one later on. But again, it continues to be really good profit margins, greater than 90%. So those revenues, those increased revenues are helping to fund our growth as well elsewhere. And going through onto flat one, we have looking at the investment for growth. So our adjusted EBITDA compared to last year is slightly up, although as a percentage, not as large as we invest in growth in the platform. So this was a planned investment strategy. We're building up the platform strength whilst also improving the platform licenses segment, and also for the audiences business, we've been doing a lot of investment in making sure that that platform can become more autonomous and allowing customers to serve themselves. So it resulted in an operating loss of 423,000, which reflects that increased spend on sales and marketing and R&D, which we planned for to drive through the advantage that we feel we have at the moment and develop the revenues on in the second half and moving forward. We expect that to normalise as towards the year end, as the investment generates those further revenues. From a cash perspective, see the movement from the end of 2021 to the end of the half year. Some timing elements on the receivables where just the revenues were coming towards the end of the half year period, but will be recovered in the second half. And that will also go along with some customers that have now opted to do some payment in advances, which will help us increase that cash level again to support the growth and strategy investments that we're doing in the second half of the year. So a bit of a summary. Continued growth, and the revenue growth is coming from all across our revenue streams. So the growth continuing in all areas. Those strong margins are still in there, giving us that cash to reinvest within the business. And predominantly that reinvestment is in sales and marketing and R&D. We took on 23 new people in the first half of the year, which added to the over 40 people we took on in 2021, all within the sales and marketing and R&D segments. And that investment is going to drive the platform scalability, adding new functionality to the platform, which then becomes available to everyone linked in and adds new features. I'll hand back now to Paul.
Thanks, Matt. So looking a bit more at the first half and some of the highlights. Again, this is a formula we've seen before, that growth in the payments business is really driven by connecting more users via more routes, more merchants, giving them more things to buy from more merchants, and using the data in the platform to make the payments as successful as possible to drive as many payments through those connections as we can. And that's given us this exponential growth in payment data. We continue to see good growth around the world in both physical and digital goods. The Amazon Prime Day we had in July was a record Amazon Prime Day for us, beating what was a really strong 2021. And with the second one in October, we're excited about just the sheer number of spending events that fall into the second half. More routes, obviously new merchants, the T-Mobile platform deal we talked about, continue to expand new services with existing merchants, wallets and alternative payment mechanisms becoming an increasingly part of the business, and they continue to generate good traction. And the merchant piece I touched on before, but just the sheer number of merchants now who are now connected into the platform across all sorts of different verticals. You remember a few months ago we issued an RNS with a somewhat mysteriously named global tech leader. That integration is going well. We're excited to be able to do sort of carrier billing for the App Store, as well as bundling for the different subscription service that tech leader offers. And that was the last really major brand we were missing from our sort of logo lineup. So we're really excited to bring them on board. But look at all the different logos, sort of all global names, but not necessarily the sort of the same video services, the Disneys, the HBOs, the Netflixes that we've seen before. But people like Weight Watchers, McAfee, Duolingo, Norton, Prey, Televisa Univision, who's an exciting new merchant we announced not that long ago. We're helping this the most popular Spanish language streaming service in the US, and we're helping them power that with their new VIX Plus streaming service. So all sorts of new merchants really, focusing and centering in on the Bango platform as their way of finding new customers and taking their services to more and more people all over the world. And a lot of that distribution is through what we call the digital vending machine. This is that SaaS business that we have with mobile operators in particular, where Bango provides this digital vending machine. It's branded by the mobile operator. They decide what to stock it with and how it's priced. But the mechanism of dispensing those subscriptions and managing those subscriptions is really the power of the Bango platform. And a lot of that R&D investment Matt talked about is about making it smarter in terms of how offers are bundled together, making sure that offers can be marketed services can be marketed using the right assets to different customers. So lots of innovation around this digital vending machine, and the result we're seeing some really great traction. That's very evident in the ARR number, as well as in the sales funnel that we see behind that. Right, the sales funnel behind that of new deals that we're working on at the moment has really never been stronger. All of those together give us this increasing pool of payment data. So this increasing pool of end user spend, which is a big driver of the audience's business. We're now doing that across more sectors. So gaming we talked about, but new logos like Adidas and Hard Rock clearly taking us away from the sort of the pure app into sort of e-commerce and general sort of brand marketing. More and more we're seeing a number of different brands start to use purchase behavior targeting, not just finding the paying users at the bottom of their marketing funnel, but in filling the marketing funnel with more users who are likely to flow through it. So we have some great expectations for that business in the second half on what is becoming an increasing variety of platforms. Facebook continues to be strong. There's been some challenge with Facebook from a pricing perspective. The cost of advertising on Facebook has probably been higher than it's been in the past historically. And that's driven two things. It's drawn certain people to move to other platforms. So we have some great growth on TikTok. And it's caused the spend that is now focused in Facebook to have an even bigger requirement on it for return on ad spend. And therefore targeting based on purchase behavior is becoming more powerful and more in demand as a result of some of the higher costs of the Facebook marketing platform. Snapchat, we've got to run our initial campaigns on Snapchat. We're very pleased how that's developing. That same will expand into further platforms in the second half. And you put all those together, that gives more paying users, and then we're back around the virtuous circle, generating even more payment data so that we can generate even more insights moving forward. So really, really strong business. The fundamentals of the business have never been stronger. It's a great position to be in, and with so many things in the second half, we're really excited about what the second half has to bring. So partway through the second half, actually only about 4 weeks ago, we announced the completion of the acquisition of the global payments business of NTT Docomo. NTT Docomo being the largest operator in Japan, Japan itself being the largest carrier billing market in the world. So we completed the acquisition of their business and at the same time signed a platform agreement. So you can see basically signing that the ability to bring global services and global merchants into Japan with the largest operator and the largest carrier billing market is really a game-changing new customer for Bango. And you couple that with the additional customers that come through the Docomo digital business, and the power of the Bango platform has increased exponentially. The rationale for us is very clear. This accelerates our growth by over 2 years. That long-term agreement with NTT Docomo, very, very powerful. The world's one of the most innovative and largest carrier billing operators in the world. And it just gives us more scale. And that more scale gives us a better position with the global merchants and gives us even more payment data to monetize through Bango audiences. I spoke of the customer base, and I think there's a few interesting points here. There are some customers that we are new as a result of the acquisition. Shopify and Jetstar I touched on earlier being interesting ones. And there are some merchants where we've consolidated our position. If we look at Google and Amazon in particular, between Bango and Docomo Digital, we were sort of number one and number two in terms of routes live. We've now combined the number one and number two, and so you have a clear leader in that sector. So really exciting opportunity there. And it's very similar on the telco side. So we brought in the telcos, particularly Millicom Group across Latin America, the Hutchison Group across Europe and Asia, Telefonica Group across Europe as well as Latin America. So really great new customers who are connecting into the Bango platform and now have access to all the other merchants that are already connected. And so really good progress. And feedback from these customers has been universally positive. I spent the last couple of weeks speaking to customers, and the feedback has been incredibly strong. And the one thing we never, when we put the number, we'll go through the numbers shortly, but when we put the numbers in the market, what we never baked in was any revenue synergies. Where can revenue synergies come from? They can come from the fact that we now have more scale, so it's easier to expand services. And I think you see the first example of that with the announcement that we made a few days ago to expand with Telefonica into taking carrier billing into Mexico. So a really new, exciting development that wasn't baked into any of the numbers that we talked about previously. So the first signs of those revenue synergies. And then the second area of revenue synergies will become from how can we expand Bango audience? a lot of really valuable payment data in Europe in particular. It's in great demand for the app developers. So there's the opportunity to accelerate the Bango audiences business even more as well. And then there are some customers that sort of fall into that piece in the middle where Bango already had a connection and did Docomo Digital, and that really strengthens our position. Obviously, the most obvious one being Entity Docomo, but obviously Vodafone, where Bango did a lot of the bundling and Docomo Digital did a lot of the carrier billing. So you put that together, and now we basically do all of that third-party integration across the Vodafone group. So really exciting position to be in. The power of the acquisition is all about migrating everything away from the Docomo Digital platform, which you see on the left-hand side of this, left-hand side of the chart on the blue box, all over to the Bango platform. And there's many benefits to everybody from doing that. Obviously, from us, it takes a big chunk of cost out of the business. That's a big part of that 21 million of synergies that Matt will talk about later. But it gives benefit to everybody else that's already connected. The way the Docomo Digital platform built was very much in silos, where as a merchant, you integrated more or less directly to each individual operator. So there was multiple integration points. And as an operator, every time you wanted to add a new merchant, you had to do new integration. That's very different to how we've built the platform in Bango. The power of the platform is you don't integrate to somebody on the other side of it, you integrate to the platform. So if you're Google, you integrate into Bango once. If you're an operator, you integrate into Bango once. And then the connection between those two is basically configuration in the middle. So a very different approach from a platform perspective, and gives massive benefits to everybody connected in, because you really do only have to connect in once. You don't have to connect in many times when you want access to another merchant, or if you're a merchant to another operator. That migration will take place over the next sort of 18 to 24 months. And really the migration plan is very simple. There are a lot of people who are already connected, those customers that fall into that middle bucket of that Venn diagram where we already have a connection. But really all we have to do is some configuration in the platform to make those connections live. And there are others where we'll have to integrate the telco, and I'll talk about how we do that. But those are, again, that's business as usual for us. It's something we've done many times before. Back in 2016, for those that have been holders a long time, we acquired a company called Build to Mobile. We migrated all of their carrier billing away from the Build to Mobile platform onto the Bango platform for Verizon without any data loss and without any loss of service. So it's something we've done before. We did it as recently as last year, when we took all of the Amazon business from another integrator and brought it onto the Bango platform. So we're very used to executing on these migrations and have a standard set of operating procedures and tools that allow us to do that. When we want to migrate routes at scale, there are really sort of three key use cases. There are people that are already connected. There's the top, where the partner just connects directly into the Bango platform. They're connected to our native APIs. There's really no work for us to do. And the majority of people integrate directly like that. There are a number of partners that are connected into the standard Docomo Digital APIs. And so actually, we've already built an adapter to convert the Docomo Digital APIs into the Bango APIs. We actually did that prior to the acquisition because we migrated a customer away from Docomo Digital over to Bango, again, without any loss of service or data. So that adaptation layer will allow us to migrate anybody that Docomo Digital have integrated using their standard APIs very, very quickly. And then we have a number of partners who will require some sort of level of customization. For those, if it's a simple custom adapter, we'll build it. If it gets into the point where it's too customized, we will look to exit those businesses, especially if they're low profitability. Somewhat ironically, the more complex integrations tend to be with the smaller operators where there's a lower revenue stream. So in that case, we will look to exit those because it's just not in anyone's interest to do all that customization work. And it's, that's not our strategy. Our strategy is the Bango platform, the native APIs of the Bango platform are really where the power is. And you should adopt those because those are the standard payment interfaces that you need if you want to expand globally.
So running through some of the key financials of the acquisition, just remind everyone we paid a gross consideration of 4 million euros for the business, but there was 3.1 million of cash left within the business, so gave us a net consideration of just under 1 million euros for that business. I think it's good here to remind the fact that this wasn't a sale from NTT for a cash benefit for them. They were looking for the right partner to look after their DCB business and to assist them with their business as it moves forward. So a lot of it was down to having a good, reliable partner. What it gave to Bango was increased end user spend, so an extra $3.5 billion worth of of end user spend that we can also utilize against the for Bango audiences. It's going to give us increased revenues, and we put that one as a full year basis of about 16 million in 23 and 24. And for that side, that 16 million is based on the revenues that we currently see. We haven't included anything for any synergistic increases in revenues either for Bango and the former Docomo business on payment side, nor for any increase that the additional data will may give for the audiences business. Looking at the EBITDA for 2022, whilst we implement the synergies, we expect to see an impact of about $4 million on EBITDA, but then that's moving to an accretive element in 2023, and then in 2024 onwards, $10 million of contribution once the synergies are impacted, and we see a lot of that top line revenue just flowing through to the EBITDA. In 2022, we'll also take a lot of impairments for some of the IP and some of the fixed assets that are currently within Docomo Digital, and that'll add to historic tax losses, and we should be able to utilize those in a very beneficial manner. And as far as the restructuring goes, part of that 30 to 35 million that we've indicated for 2022 will include some of the restructuring costs, where we'll account for those within 2022, but the actual implementation will extend through into FY 2023. So looking at the cost synergies, we indicated as well that there would be 21 million of synergies by the end of 2023. I think just keen to point out that already we've executed on some first level savings, and that 7.1 million has been accounted for within the first 4 weeks. It's 4 weeks since we took over on the 29th. So a third of the savings already implemented and executed. And we'll see some more of those building up as we progress through the transition period of the platform movement from Docomo to Bango.
Thanks, Matt. And so I think this is it's good to end again, I think, with this formula, because it's really driven our organic growth, which was really strong in the first half. And when you add in the benefits from that acquisition, it really does take us, more than 2 years forward on our sort of revenue journey. Those new telcos now get access to all the Bango merchants. We're already talking to a number of them about the digital vending machine and how they can now use the Bango technology to bundle multiple services together. Some really exciting discussions already in the first few weeks there. Lots of new merchants who we know the existing Bango payment providers now have access to. Shopify in particular, we're really keen to see how we can develop that further and maybe take that outside of Japan. The scale that it gives us with existing merchants like Amazon, Google, and operators like Vodafone really put us in a very strong position. As I say, so the scale we have in this business now is really significant, and that gives us even more data to monetize through Bango Audience. So really a really great growth accelerator, transformational deal for Bango on the back of what was a really, really good first half with good payments growth, good actual revenue growth, good platform growth, and some really big traction in the Bango Audiences business for purchase behavior targeting. So you add that to what's coming up in the second half with 2 Prime Days, Black Friday, Cyber Monday, and Christmas, and then I think we're well positioned for a really successful year. So with that, let me pause and I'll turn back, and then we'll do some Q&A.
Paul, that's great. And if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Paul, Matthew, as you can see, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. And Rebecca, perhaps if I could just hand back to you to chair the Q&A session with the team, and then if I pick up from you at the end, that would be great.
Yeah, brilliant. Thanks, Jake. So the first question that came through was how many telcos have signed up to the platform, which I think was as you were talking about platform deals themselves, but if that wasn't the question, then do send through another.
Okay, yeah, so the platform deals, and by that, when there's hundreds of telcos connected into the Bango platform itself. The number that have adopted that digital vending machine approach, I think, stands currently at 8. but the sales funnel behind that is really, really exciting. The one interesting thing about this business is because it's this SaaS licensing fee, and because an operator is in effect launching a new service. I don't know if any of you looked at the Verizon Plus Play material. When you're trying to launch the digital vending machine to bundle subscriptions, there's a lot of marketing effort that goes around it. So the timing for these businesses, the sales cycles are a bit longer than a traditional payments deal, but the rewards are so much greater because it's a multi-year contract. It's several $1 million, and it's that sort of annualized recurring revenue. So really, really strong payments funnel on top of a really solid base. And we see within the base we have, deals we've signed starting to come live. That's part of that growth, but also operators starting to climb up the different revenue tiers. So the two of those together will continue as we move forward through the second half.
Thank you. Can you expand on how we monetize the data we capture given the issues caused by Apple and Facebook?
Yeah, so if you look at what sort of Apple did a while ago with IDFA, they basically took away the ability to use sort of an app tracking ID, which was one of the big sources of data that app developers used in their marketing campaigns. And in Bango Audiences, one of the competitors has always been not another company, but actually a different way of doing things. We're quite unique in creating these audiences of users that people can generate and using marketing tools to target based on purchase behavior. The actual concept of targeting on purchase behavior is new for a lot of people, and you'll have seen a number of the campaigns that we ran last year to try and raise awareness in the benefits of purchase behavior targeting. So actually, as other sources of data start to dry up, the Bango audiences become even more valuable. And certainly we've seen customers who were using alternative sources of data now switch to using Bango audiences as a default part of their marketing campaigns in that targeting. So really, those have been certainly a tailwind, I think, for us as a business. It's caused all sorts of people to do some different things in Facebook, and some customers pause Facebook for a while, but then when they go back to advertising, the Bango audiences are in a more powerful position than ever before.
Thank you. There are a couple of questions also on audiences. One on the number of audience days sold in H1 of 2022, so maybe just a quick reminder on the revenue model shift there, and then what growth rate we anticipate in the audiences business over the next couple of years. Yeah,
so Bango Audience Days was a metric we introduced probably 18 months, 2 years ago now, to sort of try and give a proxy for the revenue of that business. And it made sense because at the time we used to sell audiences at a fixed amount for a fixed period of time. We very much moved the revenue model away from that. We wanted to what we saw was as people start to get really good results from the audiences, they spend a lot of money in that audience, and they start to play with most of the entire of their Facebook budget through that Bango audience. And we wanted to capture some of that upside. So really what we did was change the pricing model. So now we take a percentage of whatever they spend in the digital marketing platform. So if you spend $100,000 in Facebook, the fee for using that audience would be somewhere between 7 and 10% of that. So it's very much a shift in the revenue model.
Thank you. A question now on whether we're hoping to add further telcos and merchants to the platform, and as we're already integrating NTT, is there a limit to sort of what further integration the platform can cope with?
No, I mean, firstly we've built a platform in a way, and I think we've talked about this many times. We built a platform in a way that it's easy to scale, right? And the cost of us bringing new merchants and new routes onto that platform is very, very small. And there are always new merchants to be. I mean, we have now with the global technology leader all the sort of the big logos, but you can see within types of new services from Peloton and things like that, there are lots more merchant opportunity to connect into the platform. But I think the exciting point is once you have all those platforms, is getting as many connections as possible to each operator. So if each operator has 2 connections, and we want to get another 10 or 20 into that operator, and that's really where the platform power becomes really evident, because that's largely configuration, so they can be done very quickly. So I think really a lot of the key growth will be coming almost, I guess the question almost hints that we're almost at sort of critical mass and we're almost connected to everybody, and I think there's still opportunity for growth, but yeah, that's a very perceptive point. But now the opportunity is to make as many connections within that platform as possible, and that's where the revenue will really start to scale.
Thank you. There's obviously a very difficult macroeconomic backdrop at the moment, pressure on consumer sort of discretionary spend. Has Bango seen any impact of that?
Yes, that's a good question. Obviously, the macroeconomic environment changes very quickly at the moment, as we've seen in the last week or so. I think we have no data yet that we've seen that points to any particular reduction in consumer spend. Certainly, if I look at Amazon Prime Day in July this year, it was significantly above the Amazon Prime Day that happened the previous year. So no evidence there. If I look at the spend across the different app stores and different subscription services, they all appear to be continuing to grow. I think maybe there's a sort of a trend where entertainment services that you can do at home that are relatively low cost on an individual basis maybe become even more useful as you can no longer maybe afford to go out or on holiday or things like that. So maybe a spending squeeze will drive people more to use those lower cost individual services that they can consume at home. It also drives consumers to look for bargains, and that's where I think subscription bundling actually becomes really, really valuable. And actually, there's almost pressure from the customers for bundling, and from the streaming providers as well. The streaming providers start to see subscriptions cancelled on credit cards. They're looking for ways of accessing customers who have a long life within their particular streaming service. Any streaming provider will tell you that if a service is bundled, the churn is a lot lower. So they're willing to give up those few points of margin to get access to those new customers and to have those longer term subscriptions. So actually, what we've seen in the last couple of months is even more creativity from a bundling perspective, and customers wanting to bundle services together in different ways and in different combinations. So I think actually that sort of general squeeze potentially drives more creativity in a bundling perspective. And likewise, from an advertising spend, in any sort of pressure squeeze, people want to get more, better return on their investment. And there's no better way to get a better return on your ad spend than use purchase behavior targeting with Bango audiences.
Does Bango have any plans to support crypto payments with our telco and merchant partners?
Yeah, so crypto is something we've looked at before. We've done a number of proof of concepts around that. Historically, the gas price, that the cost for updating the ledger made sort of most cost prohibitive for these sort of micro transactions. So most carry billing and subscriptions are still a relatively low value for each individual transaction. So it made it prohibitive. But I think where we've seen a lot of interest is in crypto trading platforms. So we have a number of crypto trading platforms who are Bango audience customers who are using the purchase behavior targeting to find high spending users who can make those first time deposits. But it's a continually evolving area, and we'll see particularly how that evolves over the next couple of years. And certainly the platform is absolutely very much capable of doing that. We're very agnostic, right? We've built a set of APIs that are agnostic to any payment mechanism or to any merchant.
You touched on this briefly during the presentation, but can you just remind us of the factors sort of affecting revenue growth this half versus revenue growth the previous half?
Yeah, sure. So if we look back in last year, especially, I think there's been a general sort of currency headwind. We don't report constant currency, right? We report growth in actual currency, and we grew 10% in actual currency. If you correct it for currency, I don't know, it's probably somewhere 17 to 20, I would guess, somewhere in that range. And it's against a period where last year Amazon Prime Day was in June. So as we said, Amazon Prime Day moved from first half to second half. We look at the second half coming up. We have 2 Prime Days, Black Friday, Cyber Monday, Christmas, and a whole host of new merchants and operators to connect. So it's looks like being a really strong second half.
Thank you. You mentioned Adidas as a new customer for audiences. Can you talk a bit about how Adidas are using Bango audiences and whether you spend data that's relevant for them?
Yeah, so we started working with Adidas very initially on to help them target some of their fitness apps. So it was a fitness app that they offered under a slightly different brand, and that's how we started to work with them. I think what they saw is actually the targeting that worked for the app actually works for generic e-commerce as well. I think if you look at it very simply, if you're paying money for a running app, you're probably also buying running shoes. So why wouldn't you target the same audience with e-commerce adverts for your physical goods as you do to bring customers over to sort of the digital goods as part of the fitness app? And I think that sort of principle extends nicely across the rest of the business. And I touched on it a bit earlier, but marketing funnels have sort of different sort of focuses. And when you get right at the bottom of the funnel, it's all about converting a customer and getting to make that purchase. And that's really where we focus the power of the Bango audiences and purchase behavior targeting. But actually, it works at the different stages of the funnel, even on sort of as you're starting to bring in users who may make a purchase. We can fill that funnel with more users who are likely to fall at the bottom, again, using purchase behavior targeting. So we're seeing that the sort of generic brands start to use purchase behavior targeting in slightly new applications, climbing up the marketing funnel.
A question on Bango share price and whether you can give your view on the recent share price performance and whether you feel there's any takeover risk.
Yeah, that's a good question. I mean, I think if you look at a very big picture level, we've had a great first half and we've grown. Where I think there are in real terms, where the other companies who have not reported at such level of growth, we're still on or ahead of the forecasts that are in the market. We've great traction fundamentally on the business, diversification of revenue stream with the platform business. Bango Audience is going through great growth, and then we announced a transformational acquisition that delivers 15 million of revenue, 10 million of EBITDA. We didn't really pay a lot for it. Gives us that long-term partnership with the largest operator in the world, and the share price today is more or less the same as it was a few months ago before we did that sort of transformational deal. So I think if you ask us what we think of the share price, I think we're very disappointed. Clearly, there's lots going on in the macroeconomic climate that we can't control at the moment. But I think it certainly, I think, potentially increases any sort of takeover risk, just because we feel we are so undervalued now, given the potential returns in the future. But on the positive side, we have a strong and loyal shareholder base who are in this for the long term. They're in it for the big picture, and they see that journey to hundreds of millions of dollars of revenue and sort of billions of valuation. So I think they're in it for the long term. Yeah, but absolutely, I think it'd be a lie if we said we were anything other than disappointed with the current share price.
Paul, if I may add as well, that when I'm asked questions like this, I always look at those of you who can access the analyst reports on Bango, and maybe those of you in the retail market look at Investors Chronicle coverage and things like that. You'll see their target share prices are considerably higher than the share price that we've currently got. And I think the most recent analyst reports have pointed out that the forecast and future earnings and discounted cash flow ratios that Bango is currently trading at are way below the average you would expect for a business of this strength and this financial profile. So you can take from that what you will, but it seems like the consensus from analysts, etc., is Bango's share price is heading to a much higher point than it currently sits at.
Thanks. What is the progress on the New Deep joint venture and its technology that targets Shopify sales? And how does the acquisition of Docomo Digital strengthen the relationship with Shopify?
Yeah, very good question. So if you look at what the New Deep acquisition, which is a joint venture that we hold with NHN, what they're focused on now is very much on using the platform they had to make people who run the Shopify shops more money. So be able to convert more users, run campaigns that convert abandoned baskets into baskets that fulfill the currently shopping for. They've been continually investing to add new features onto that platform. It's now very sign up. You sign up almost like as a Shopify widget if you run a Shopify shop, and you add it to your store. So the customer acquisition now model is very much self sign up and self serve within that particular model, and they're making really good traction. Focused very much initially on the European market, but they're really making good traction. The nice synergy that we have that we need to see how we can exploit is the relationship that we now have with Shopify, who are now a payments customer for Bango in Japan with entity Docomo. And I think there's clearly, if we can connect, the New Deep technology that creates more paying users, if we can use that to generate more payments, and we almost have a second virtuous circle almost there. So we think there's definitely opportunity there. We'll have to see how we can use that over the coming months.
We've talked about sort of the journey to hundreds of millions of dollars of revenue. A question on sort of whether we can give any timing target on sort of reaching that $100 million of turnover.
No, I mean, I think we've sort of never, deliberately never given sort of a target on there. But I think you can see sort of the historic growth and the pace that we've made. We just in one swoop added 15 million to that, and that's a conservative forecast without those revenue synergies that we get from now having more data for Bango Audiences, expansion with existing merchants and operators like we've already seen with Telefonica in Mexico. So no, I think we're plus 2 years forward on that journey. So I think let's see how fast we can get there.
That's it for questions on what we've had through, I think.
Rebecca, absolutely, and Paul, Matthew, Anil as well. Thank you for being so generous of your time there and addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, and then add any additional responses where it's appropriate to do so. Paul, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
So just want to thank everybody again for your time, and for those that have been shareholders a long time, we appreciate your support and your continued support for the business. We've had an incredibly busy first 9 months of the year. The last quarter looks to be busier than ever. Lots of opportunity. Please, if you do have any questions and that you didn't ask today, or you didn't feel we answered successfully, then please do email investors@bango.com. We really do appreciate and value all your input and feedback. And thanks again for your support. And we look forward to seeing as many of you who can on our Capital Markets Technology Day, which will be held in November. There's details on the Bango Investor website. If you'd like to register for that, please do. There are links on the Bango Investor website in terms of how to do that. It'd be great to meet as many of you in person as possible then. Failing that, we'll talk when we announce our full year results in early part of next year. So thanks again for your time, and speak soon.
Paul, that's great. And once again, thank you for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Bango PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.